My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job is not just to teach, but to entertain a bit and educate. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Most of the time, all we ever hear about these days are the Fed and interest rates, Fed and interest rates. I find it nauseating. The yield curve is not why I got into this racket. But then there are days like today, where we actually focus on investing in individual companies, not trading the Fed's next move, not underweighting, not overweighting sectors like these are all components, they're all the same, it doesn't matter what they do. That's what makes this so exciting. And then when the Dow soars 524 points, the S&P surges 1.96%, and the Nasdaq soars 2.43%.
House of pleasure.
On the densest day of earnings season, the day where we get numbers from the most companies in one session, I find it the whole day to be a giant celebration of the ingenuity of executives and their teams. It's a validation not just of how good our companies are and the CEOs are, but of the very concept of stock picking over indexing. Now, I've always believed that if you do the homework and you pick the right stocks, you'll be able to make much more money than you would by parking everything in an index fund or a bunch of made-up ETFs that bundle entire sectors together in a single dull basket. Yet so many supposed experts tell you that stock picking is for chumps, that you're better off not even trying, because they say it's impossible for you to reliably pick winners. Days like today, I think, show you that's nonsense. I say buy some S&P 500. Sure, buy an index fund, but also buy some stocks. The indexistas believe you will never figure it out, and I will let you in on a secret. They have total contempt for your attempts. A self-serving view, if there ever were one. So why don't we go over some of the opportunities the index funds evangelistas would just say, you know what, you're never going to find, so don't take them. We got to start with one that everybody uses, at least from the numbers that I saw today. We got to start with Meta Platforms, the artist formerly known as Facebook, which reported a breathtaking quarter today. Last night, I should say. Even after today's magnificent 14% run, I think there could be much more ahead. Yeah, a lot more upside, which is why we own Meta for the Travel Trust, where we do have a huge win. A year ago, Meta was being written off as a tired old growth company, even though it wasn't really all that old. It looked like that an embattled CEO, Mark Zuckerberg, being one of the few executives who's disliked by both Democrats and Republicans. He's a uniter, not a divider. But now Meta's been roaring for 6 months in a move that was first widely scorned as some sort of short covering trap. Today we learned this run is real. It's based on a kind of foundational change that you simply can't catch if you only own just an S&P 500 index fund. And remember, I want you to own both. Own individual stocks and S&P if you have time and inclination. Meta's Mark Zuckerberg has done something truly amazing. He has embraced artificial intelligence to figure out how he could get people to engage more with Facebook and Instagram. They'd stopped engaging as much as they used to. And he succeeded. You know, he succeeded, yes, with AI. Users were only posting a couple of times, making it so you didn't need to bother to check your feed. Making things worse, Apple changed its privacy policy to make it harder for Meta to do targeted advertising. But AI changed this company. Last night's call, Mark said that he wasn't happy with how things were going. I love the candor here. So he creatively called on AI to identify posts that you might want to see from people you've never heard of. He used AI to boost as much as what he said, the massive recommendations and ranking infrastructure that powers all of his products. I think only Microsoft is doing more with AI right now, although Mark may be doing more, to tell you the truth. The result, as Mark put it, quote, more than 20% of our content in your Facebook and Instagram feeds are recommended by AI from people, groups, or accounts that you don't follow, end quote. Across all of Instagram, it's about 40% of the content that you see. Can you imagine how much growth there will be about this? Meanwhile, again, using AI, he's got Reels, his TikTok knockoff, on a flight path where it can actually catch up to TikTok. And one day, I think, match its immense profitability. Apparently, people now reshare already Reels more than 2 billion times every day. It is doubling over the past 6 months, for heaven's sake. That's an insane number. But when you consider that Meta now has more than 3 billion people who use at least one of their apps each day, I'd say this company has not only come all the way back, but its earnings per share cadence will be amazing. Reels isn't making money yet. Can you imagine what happens next year when it starts? What makes me even more confident about buying this stock, even at 230, up 29 points today, is that Zuckerberg's actively taking out costs, which we know, sadly, is a euphemism for firing people. He's fired nearly a quarter of the company. When revenues go up and costs go down, you get what I call a long-term earnings explosion, which can fuel tremendous gains well beyond what we saw today. I'm well aware they took out a $4 billion loss in the metaverse. I heard that all day when people tried to say this company didn't do the real stuff. I don't like that number either, given how revenues actually decline. But that's just the cost of R&D, frankly, like a drug company might do to refresh its pipeline. Maybe the metaverse bet won't pay off. Zuckerberg's early embrace of AI just saved the company, though. I am confident he will have the guts to take tough actions to rein in spending if it doesn't work. Hasn't he showed you that already? Of course, he's not alone. We know Microsoft's exploiting AI like no other, with its $10 billion investment in OpenAI, the company that created ChatGPT. They're using artificial intelligence to re-engineer and reshape everything from Azure, that's their cloud infrastructure division that did so well this quarter, to Bing. They're also in search engine that may make a comeback. No wonder the stock won't quit. Again, I think Microsoft goes higher, even after hitting a new 52-week high today. And yes, I am excited. Why? Because these are ones I've been pounding the table on. I pounded the table on that darn metaverse, for heaven's sake. I was out there, I don't even think he had the faith I had in it. Oh, actually, I think maybe. It's not just tech. How about Eli Lilly? Today, Lilly talked about how they're about to ask the FDA for approval to sell their diabetes drug as a weight loss pill. Based on data, well, it's a weight loss, like that. Based on the data we have, we hope it's going to be a pill one day, believe me. Based on the data we have, it could be a game changer. It's looking like, get this is what this thing does. Not only does it lower, is it good for diabetes and lowers weight, it lowers cholesterol, it lowers blood pressure, and here's a new one, it can cut out heavy drinking. And heavy drinking is just plain bad for you, much as it pains me to say that since my wife owns a mezcal company.
The House of Pain.
Lilly jumped $14 today, and it's been a horse, a genuine secretariat. It's run from 312 to 390 in less than 2 months. Because we don't have enough good news on the FDA approval yet, I do think it can run and run and run some more. There are a lot of good drug stocks out there, but Lilly is the standout. How about Chipotle? The stock's been lost to the wilderness of fast food, caught in the scrum between Cheesecake Factory and Applebee's. And then it reports a magnificent quarter like it did Tuesday night with a definitive re-acceleration that's so broad, Wall Street instantly re-rated the stock upward, sending it up more than 200 points yesterday. I know, amazing. Not only is Chipotle back, but it's going to stay back. And I don't think the run is finished by any means. Now, some stocks haven't had their day in court yet, but they're still run on the backs of others. NVIDIA's been mentioned by, NVIDIA #1 pick, by the way, in today's stock picking contest. NVIDIA's been mentioned by both Alphabet and Microsoft as the backbone of their artificial intelligence engines. The true engine of AI is NVIDIA's H100 card. Now, you can buy one. I saw it on sale. Go on eBay. You'll see it. 45 grand. You ready for that? But one's not enough. You got to buy a boatload of these things. When I asked how many cards some of these big users need, a source from the customer side said, as many as we can get. Yes, NVIDIA is the backbone, the engine of AI, and AI is the future. Own it, don't trade it. Finally, there's General Electric, which has quietly become the market darling industrial because after it's finished breaking itself up, it's going to be the only pure play on aerospace that is not Boeing, okay? It's become the hottest manufacturing segment in the world. GE is what Boeing would look like with a lot more luck. And certainly I wish they had that kind of management. I think all of these winners, every one, is still a buy. There will be many reversals in this market, especially if the debt ceiling doesn't get extended in time. So you're going to get your chance. So bottom line, if you don't want to buy these stocks when they're up huge immediately after earnings, put them on your shopping list and wait until the next market-wide pullback gives you a better price. Let the squabbles between the House and the Senate around the debt ceiling once again give you a better price. They always do. Mike in Illinois. Mike.
Hey, Jim.
Mike.
Happy to speak with you. Mike from Chicago.
All right.
I love your show. I think you're a guru.
Oh, thank you. Man, I make a lot of mistakes. I'm the first guy to admit it. Some other guys never make mistakes. How's that possible? I'd love them to never make a mistake. How can I help?
My question is, I bought 500 shares of Wingstop the day of their IPO 8 years ago, and I'm showing a heck of a profit here. And I'm wondering what your opinion is, if I should sell some, sell all, or hold.
All right, let me give you my wrap.
report.
Let me give you my wrap. All right. First of all, what you must do, we got a new CEO. I like the other guy too. Is a skipper. It doesn't come on the show. Here's what you have to do. Tomorrow morning, you're going to take out your cost basis. Then what happens? You are playing with the house's money and let it ride. Today was the kind of day that rewarded the companies that are changing their stripes and the stock pickers who have been confident enough to invest in them and weren't bamboozled out of them by people who create ETFs to make a lot of money for themselves. And if you missed out the big movers this week, just put them on your shopping list. Wait for the House and Senate to give you a better price. On Mad Money tonight, with investors thinking the Fed might slow their tightening, what do you do with a well-run insurance company like Chubb? I'm going to dig into the story with the CEO. Then Pioneer, hey, changing the C-suite. So I'm learning more about the transition from the outcoming and incoming CEOs. And Caterpillar, wow, fell real bad after earnings. What the heck is going on here? Look at a great quarter. Why don't we talk to the company's top brass? So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.